live from the Tepper School of Business. My name is Lucky Lillygreen, your host of TSBN, and this week we have a lot to cover, so let's dive in. It is the first weekend of September, and already we are seeing meager U.S. economic results. First, there are clear signs of a weakening in the U.S. labor market. A report from the U.S. Bureau of Labor Statistics demonstrates a decline of job openings, adding only 22,000 jobs in August, well below the forecast of 75,000, while unemployment nears a four-year high of around 4.3%. Furthermore, Friday's U.S. monthly jobs report demonstrates that job growth is at its lowest level in 15 years. This report has raised concerns about the state of the economy and the risk of the country undergoing stagflation, a period of high prices and slow growth. Second, manufacturing has slowed and has been for the past 6 months. Rising prices continue to be an issue for the consumer amid Trump's trade war, as the Federal Reserve's Beige Book reports flat consumer spending. All of this is to say, as the Fed's meeting is later this month, on September 16th through 17th, a rate cut could definitely be in the near future. However, investors are concerned about the state of independence of the central bank. The president has consistently pressured Powell to lower rates, and that would certainly stimulate economic activity. Yet the Fed needs to stay separate from the government and make the best decisions for the economy independent of what the president calls for. This expectation of a cut has pushed Treasury yields lower, ultimately supportive of consumer borrowing over time. Stock markets saw record highs, followed by some volatility with grim labor news in the back half of the week. Specifically, we saw gains across the board, with the S&P 500 closing at an all-time high on Thursday, but slipping a little after Friday's jobs report by 0.3%. The Nasdaq was also up this week, but fell amid the news as well. The Dow is down 0.5% after Friday. Moving on to market movers of the week, let's start with Alphabet, ticker GOOG. A ruling by a federal judge earlier this week determined that Google gets to keep its Chrome browser, leading to a surge in its stock price of 11% to $235.05. Kraft Heinz, ticker KHC, trading at $27.29, announced earlier this week its plan to split into two different companies, one named Global Taste Elevation, which will include sauces, spreads, and seasonings like the well-known Philadelphia cream cheese and Heinz ketchup, founded right here in our backyard. The other company, to be named North American Grocery, will focus on struggling grocery items and on-the-go foods, including Oscar Mayer's, Lunchables, and a few others. The company expects the deal to close in the second half of next year, and the stock has not moved much on this news. Although apparently Warren Buffett was not happy about the split when he spoke to Becky Quick on CNBC this week. Hailey Bieber's Rhode Beauty joined e.l.f. on the floor of the New York Stock Exchange on Friday, officially celebrating the $1 billion acquisition of her cult favorite beauty brand, which has generated $200 million in sales in the past 3 years. e.l.f., ticker ELF, trades at around $133.97 and has been up 21% in the past month. Other top movers include Campbell, ticker CPB, up 7.2% after fourth quarter fiscal year 2025 earnings. Enphase Energy, ticker ENPH, rose 8.75%, although is trading down 44% in the past year, likely due to the poor environment for solar under current administration. Lastly, United Healthcare, ticker UNH, up 28% in the last month due to purchases of shares by both Warren Buffett's Berkshire Hathaway and our very own David Tepper's Appaloosa Management. On the bottom, most notably, we have Lululemon, as shares fell 18.58% to close at $167.80. This is the lowest I've seen Lululemon in a long time, and I've been following this stock since high school when it was performing north of $400. Due to the company cutting guidance, increasing costs due to tariffs, and a shift in consumer preferences, consumers have more choices for activewear now than they did 5 years ago. As for commodities, we saw gold hit an all-time high this week, rounding in at $3,586.69 per ounce. The federal funds interest rate hovers around 4.33% to date, with a cut expected in the near term. And Bitcoin is near its high, but settles around $110,853.80. The price of Bitcoin has doubled since this time last year. Finally, internationally, we saw world leaders gather in Beijing at the Shanghai Cooperation Summit. The president of China mingled with India's prime minister and Russia's president, Vladimir Putin, all while holding hands as a sign of unity. In Western Europe, we have seen and will continue to see a rise in far-right government groups, with France's National Rally, Germany's Alternative for Deutschland, otherwise known as the AfD, and Great Britain's Reform UK, gaining election momentum. It is the first time in modern European history where far-right and populist parties are leading their country's political ideologies. The far-right surge goes back to the world financial crisis of 2008 and the current issue of immigration. That is not to say these far-right movements have not faced problems. Certain AfD leaders have been caught for their ties to neo-Nazism and using banned Nazi slogans. France's Marine Le Pen was convicted of embezzling EU funds, banning her from the 2027 presidential race. Additionally, there were 24 other members of the National Rally convicted. Le Pen has filed an appeal, and we await a decision to be reached in the summer of 2026. All of this affects the market because the EU and the United States are deeply intertwined. Shaky investor confidence in Europe can have ripple effects, and trade war tensions paired with the changing of political tides can lead to broader geopolitical tensions. France's instability in government has resulted in the underperformance of French stocks and the CAC 40 index. Germany's AfD calls for exiting the euro and supports tariffs. Lastly, as the Greens lose voters, the push for green energy has slowed, impacting solar significantly. With that, we have our first episode of TSBN. Thank you so much for joining us. I'm your host, Lucky Lillygreen, and we hope to see you next week.